Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Good morning to the Bookmap Discord Trader Lab community. Thanks for joining, and all our visitors in YouTube to the Trader Lab. Today is October 14th, 2024. And let me take care of business, and I have a couple interesting things to mention to you. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is based on structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab community. The community in the Trader Lab is a group of like-minded traders who have come together with various degrees of experience. Senior trader has over 50 years. I have 45 years of trading, both professionally and otherwise, out here with you. And a diverse group from newer traders to very seasoned, and all different kinds of methodology. However, the goal of the Trader Lab is to leverage our collective experience to create something better. In addition, the resources of the Trader Lab are available to all Bookmap Discord participants. There is no cost to join the Trader Lab. There are 60 PDFs of structured trades, as well as a library of webinars on the process you're going to see here today. And this is more of a basic process. This is a fundamental process to how the market works, why it does what it does, and how you might get in alignment at times with it. It is about the basis of trading in a sense of what is trading, what is the business of trading, how do you potentially create a career in the trading business. And if that is something you have interest in, then I invite you all to visit the Bookmap Discord Trader Lab community. So let's get going. Now, something I want to remind everybody of. During the summer, I was mentioning about the development of something called a blow-off top. Now, I'm sure many of you have forgotten about this, but I certainly haven't. And what happens in a blow-off top is it starts, of course, all consolidations are a compression of energy, no matter what fractal or time frame they are in. And of course, in trading, there's always two sides, and it's the market goes down, there's shorts, and then it comes up and squeezes the shorts out, and the market gets up too high, and it rotates. Rotation is a part of how the market operates. Now, the thing about a blow-off top is, at some point, we get into extreme behavior. And I believe, and this is, of course, not a recommendation, that we're seeing a manifestation of this topping process now. Now, I'm not calling a top. It's not my job. I can't pick a high or low of anything. That's not what we do as traders. However, it's important to recognize history and also understand how the market tends to work. When the market gets extreme, we get behaviors like we have. We've had several trend days in a row. We have a breakout so far today, a gap and go situation. That is showing you an extreme potentially is developing. Now, when you have blow off tops, it isn't just go up, go down. It gets extremely volatile until all those who are have not participated feel they can't take it anymore and they charge into the market. And that's typically when it's bullish, where you can't see straight anymore. It's typically how tops are created. In addition, in the US, we have a very important election coming up in the not too distant future, beginning of November. Well, here we are mid-October. Something to think about. So make a note of that, guys. And again, you should be researching what blow-off tops are, what they look like. It's a phenomena of market mechanics. And speaking of market mechanics, this stream's about integrating Bookmap order flow tools with auction market theory, in other words, how the market works, using a volume profile as a chassis to overlay trades on. So let's go into the trades. And if you have questions, please post them in the Bookmap Discord Trader Lab chat or in YouTube. and I'll do my best to answer them. How we doing in YouTube, by the way? Are you guys hearing and seeing things okay? Please give a thumb up or a like in YouTube, and we will go from there. So let's go into the RTH Open. Now, we open and higher. Now, there's a couple things I want to point out to you. First of all, we're in what you might call thin air. You know, we're up in a place where we've never been before. So what the market often will do, hold on a second, I'm on the wrong screen. Hope this doesn't lose my place. Yes. Got to go back to the RTH Open. I also watch, by the way, this is the Trader Map Lite. It filters out the algos so I can actually see the resting liquidity clearly. I watch this on a different monitor. So I use this for my trading, and I don't trade off it because it's strictly for streaming. But I do use the Trader Map so I can see the resting liquidity clearly, whereas you'll see here that there's this algo, bracketing algo, that kind of messes things up a little bit. So Bookmap has a way for you to get rid of the noise. So there's different filters and things on here. So when you have a bracketing algo, which is just noise, literally, we don't want to see the noise. We want to see the actual liquidity. So just one of the features. So I want you to know, that's why I was on that screen. So I was on the wrong screen. Hold on. Now I'm going to go into the RTH Open. Let's look at some important levels. ETH high, important level. Overnight volume point of control. This is the retail price or the highest volume price from the ETH. So think of it like shopping. Auction market theory is not a complicated concept. It just the word theory throws us off. Let's call it something else, shopping. Because that's auction market theory when you go to supermarket. If it's on sale, you buy it. If the price is retail, you buy it. Because everybody agrees that's a fair price, buyers and sellers. If it gets too high, you go, nah, not going to pay that. Maybe you shop someplace else. Now, there's another side to that. Suppose it goes on sale and everybody wants it. Then the sellers are going to raise the price. Here's yesterday's high. ETH mid. And yesterday's settlement, by Friday, I mean settlement, and the retail price from Friday. Now, let's look at how we might think about this. The RTH Open is here. We're right near the ETH high. We are above the retail price in the ETH. In other words, they were willing to do most of the business here in the ETH. And on Friday, they were willing to do the business here. So what do we know about this? We're opening above Friday's high volume price and settlement. We're opening above the overnight mid. We're gapping above yesterday's high, and we're opening above the ETH retail price. What might that say? Might it say this is too low? The mid is too low. We don't know about yesterday's high. We might fill the gap. Retail is here in the overnight VPOC, and the ETH high is there. It is suggesting an upward skew. Suggesting is the term I want to use here because there's no predicting. Now, I came in here and I thought about this, of course, and I have a trade plan, of course, and this is what happens in the Trader Lab. It's called building a business of trading, and you need to have a trade plan to anticipate what might happen, not predict. We are not in the prediction business. We're in the maybe business, the business of maybe, and that's gaming theory. You've heard of auction market theory if you've been following the stream, but there's something called gaming theory. Gaming theory is only playing games like a casino that have a statistical or vetted edge. They play the games exactly the same way when you go to a casino. No matter what happens, if the last hand somebody walks out with 100,000 in a suitcase, the next hand is dealt the same way. We don't do that because we're emotionally attached. They take a long-term view. Now, long-term for them is over a large sample size of random distributions, the net comes across the table to the house. But it only gets there if they play the games exactly the same way. They don't make the games up. They don't change the game. They play them the same way. But we don't do that because we're so smart, right? What are we really? We are attached. We are emotional beings, and we are guided by our fear and our fight and flight. That is the reality. You don't have to accept it. But ask yourself, when you are determined to do something and you don't do it in spite of your intention, why is that happening? It's because of the fight and flight response. It is instinctual. It's way beyond your ability to intellectually interfere with it. You need a trade plan that has statistics, just like the casinos do. The casinos know that the outcome of any hand is random, but they're not attached to the outcome because the only way they get their yield is by playing the games with anchored inputs. Not multiple inputs, not variable inputs, not throwing spaghetti against the wall, which we tend to do with all our time frames and all our indicators to try to create certainty in an environment where there is none. I hope this makes sense. Now let's get into the first trade. So my plan, and I'm not saying mine is any good, I'm just saying this is the plan I got, so I got to work with it. And your plan may be better. And I believe anybody can have a better plan than me. Why should mine isn't? There's no such thing as better. What there is what works for you. What time frame works for you. Some traders are longer term time frame. They'll put a trade on, their stop will be under the low of today, and they're just going to go to lunch or go to the gym. Other traders are going to trade the rotations. So, first trade. So I'm looking at this and I'm thinking I have two possibilities. The first one is, because statistically, I have a high probability of coming down here and potentially filling the gap. I also know that if things get rolling, I can get to overnight mid. I'm just telling you because this is part of the trade and settlement. So gap to settle, right? So I said, well, that would be a nice trade here, down to here, maybe here, and definitely there. Overnight volume point of control, and I always say I don't want to do this, but I can't help myself, has a 79% probability. The ETH high has a 76% probability. Past performance, not indicative of future results. You got to bet this. So I'm saying I got a high probability here, and I got a higher probability here. Why wouldn't I get short? Well, what happened on Friday? Anybody notice or remember? What did we do on Friday? New all-time highs. Breakout of a two-day consolidation. And then we had some selling at the end of the day. Let me think, going into a weekend, is that reasonable? Yes. So if we have a breakout on Friday and a trend configuration, what might you anticipate today? Maybe gap fill or gap go. And that's what I know. After that, put your helmet on, welcome to trading. Because the best you have, write this down, is maybe. Maybe. So let's look. So I'm sitting here, and I'm going to tell you my trade. My first trade's a long. Now, there's part of me that says it's a short, but it's not based on the context. If I'm myopic, I'm going to see a short trade, and I see a short trade. This is a theoretical short in the trader lab, right here. And I'm looking, and I see buyers and I see my sellers. So I'm getting my responsive selling. And I'm going, well, this looks like this could be a short. So I'm watching. I test the volume point of control. This is my retail price. Remember, my buyers and sellers are meeting here. The highest volume is here, and it's retail. Remember the auction. I'm not paying that. And that creates my downside rotation. So there's part of me, the conflict, the human, the FOMO side that's going, hey, you should have sold that. You know, it's real clear in hindsight, right? We all think that. Now, the other part of that is I'm not going to sell it. I want to see where I come down, because if I come down to that overnight volume point of control, I'm going to buy it if I find buyers there, which is here. So this is my area to get long. And I thought, I don't need this. I'll wait. So I get VPOC migration. This is suggesting me lower. So I'm thinking, okay, where's my long? Here. over 80% probability. Past performance not indicative of future results. You got to vet it. So I'm watching. Developing volume point of control is here. Watch this. This is very nuanced and advanced. Not everything you're going to see here in the stream. Some of these are a little more advanced conceptually, but they're all structured trades. The number one element for trading, in my opinion, is the context. And I always go over this in the Trader Lab. It's called context. What is the context? That's what happened Friday, what happened Wednesday, Thursday. We had Wednesday was a breakout trend day. Thursday was an inside day. Friday was a breakout trend. A little profit taking going into the weekend, normal. And what's today? Gap and go. I think you can say bullish, get long. If you want to get short, that's your business. For me, my business is long. Here, watch. Too high, going to zero. I'm waiting to get long here. I just want you to know that's my plan. Doesn't mean it's any good. It's just a plan. You know, like all plans, it's the best you got is maybe. Variable high volume node. I made these terms up when I started doing this way long time ago. Nobody was doing it this way, at least as far as I knew. So I had to make up terms. So I call this, if this is high volume or retail, I wanted to keep track of the volume and the price, because volume and price are what this is all about. Shopping. If a price becomes too low and the sellers won't sell it at this retail price, which is high volume, and the price goes up, does that suggest maybe, remember the word maybe, this might be too low? And I don't know. I'm looking for this. So I see this and I'm going, okay. Now notice what happened here. Too high, buyers won't pay it. Now what we have going on here is called responsive selling. There's those who are long and we get the gap and they are responding to the higher price. I just want you to know what this is. There's a term for it. It's called responding. So they're responding. Okay, fine. Take a profit. Lovely. Now where's too low? Don't know. So we come down here and I get my VPOC migration. Now notice what happened. I'm taking you into nuance so you can speak the language of the market. You can speak market. What are your indicators? Translators. What am I doing? I'm just reading it right here. This is language. What does it say? Buyers are here, selling icebergs are there, retail is here, and they're not paying it. The price comes down to here where the yellow line is. What do I see? Too high. The sellers are here. The selling iceberg is there. Buyers are here. Sellers are here. As far as we know, it's coming down here. What happens here? Buying iceberg here. Sellers are here. Now, you know there's an aggressive and a passive side. A little order flow for you. Very important. What are we doing? Integrating order flow with the auction using the chassis of a volume profile. And over here, this is the chart volume profile, and I'll be able to zoom in and out, and it's going to show me only what I want to see so I can drill into it. So too high, going to zero. But right here, I see the seller. Now, this is the aggressor. Now, the aggressor is made up of initiators and sell stops, which become market orders, and it works the same way. So when you see a red bubble, that's not a short. It can tell you that there's an aggressor, but it doesn't tell you what the other side is doing until you see the behavior. So right here, I see my first true indication. What happened up here, by the way? Sellers. What happened here? There was a buyer. What were they met with? A seller, iceberg. A buyer here. What were they met with? A seller, iceberg. Sellers here, going to zero. What were they met with? A buyer, higher. Over here, micro high volume structure, right there, support, advanced, developing volume point of control, here, retail. Why did we go up? Buyers are here, they are absorbed. Buyers here, up, too low. Minutia, detail, where do we test? The micro right here. This price, let me open it up for you again, and we're still in a bullish configuration just in the present, just saying, this is too low. What happens here? My sellers are here, my buyers are there. What do I get here? My sellers are here, and what happens? The buyers are above them. What does that tell you? This is order flow. Absorption, and as soon as I cross over, for me, I get long to here. Scale. And then hold. Now, there's more. VPOC migration. Now, you remember the VPOC migration from down below, don't you? Now, before I go on, are there any questions? Yeah, thank you, Dan. So for me, that was the first trade, Trader Labs structured trade, and it's a bit advanced because it's a crossover. And what you saw down there is something called reversion trading. It's a bit advanced because it was in midair. For structured trading, if it got down to that overnight volume point of control, that's a purely structured trade. What I did was a derivative, and you'll see it here, by the way, right here. When the volume point of control, this yellow line, is above the price action, it changes from directional to mean reversion. Mean reversion is a rotation. Remember how the auction works. What's too low? Oh, it's on sale. Retail. And then what's too high? And then rotation. So this thing can rotate around this, or here's the other part. It can just come back here and push right off. And part of the joy of trading is who knows. Remember that. Who knows? I don't know. So I don't try to know. So this, now we have a couple, I'm going to mention another structured trade to you. Something called mid and VWAP to VPOC. In this configuration, which is a trend configuration, so we have a gap we didn't fill, everybody wants this thing, and the buyers are absorbing the sellers. Sellers are here, buyers are here. Where do we come out? Sellers are here. Where are the buyers? Over there. This is an aggressive trade. Now, it's not a recommendation. It's a trade that doesn't really fit, but it might fit. And let me explain it to you. First of all, I'm going to label this, and I'll tell you what this is. It's important. There's some really neat structured trades that showed up today that are Trader Lab structured trades. And if you're in Trader Lab, you guys, you know these trades, and I'm sure many of you participated. And those of you who didn't, keep working on your craft. It takes time to develop the confidence because we're all fearful. Right here, there's a seller. Seller is here. That's absorption. The buyers, it's like Pac-Man. The buyers ate this seller. Think of it that way. The sellers are here. The buyers that are here said, oh, really? And they bought more. Support. Buyers, 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 buyers. Now up here, the buyers were absorbed. There's the selling icebergs, and you get your sellers. Where do they come? Now, again, this is order flow oriented. You have to learn order flow, and you can learn that. There's no cost in the Bookmap Discord Trader Lab community or the additional education available in the Bookmap server, which you can attend. And there's even a free digital version of Bookmap that you can get your hands on. There's no cost for it, and that's also in the bottom of YouTube, as well as a link to Discord. Here's support. Buyers were here. We come back. Here's the sellers. These buyers absorbed. That's how I think of it. Buyers are here, sellers are here, they're absorbed. Now here I see absorption. I can't remember what I did over here in the sense that I can't remember. I'd have to go look at my other software, which I can't at the moment. So we come out here, where the sellers were here, buyers take a shot, not so good. They come down. Now, we have a couple things here. This is a low volume area. Sorry about that. And an outside edge over here. Sorry, I'm a little distracted. I was expecting a call. So we come out, outside edge, we get acceleration up, we continue. This is mean reversion. This is an aggressive trade. I saw this, I did not take it. This is a structured trade in the Trader Lab. And I was looking for it to come out here because I need range. And I wanted to point this out to Trader Lab because this is a structured trade. Trend is up, context is up. This is called mean reversion. That's the mean. It's outside in trading. The structured trade is VWAP in mid, and I saw this as a long, not qualified. I do not just run in blindly. I have a trade plan. My plan says I must have enough range to here because my sellers are here and here. These buyers got thrown under the bus. The sellers took over. The sellers are here, right here. You'll notice where the sellers were. The passive side is here. Where did we come? We came back and checked it. It's too high. So if I'm getting long here, I'm coming here, and then this is resistance. So I can't trade it. So I'm just telling you, I didn't take it. And the reasons why. It's very important you know why. There's reasons you take a trade, and there's reasons you don't take a trade. So I am holding my longs. I thought maybe, I don't remember what happened over here. But I remember I posted 5,900. And the reason for 5,900 was there's liquidity resting up there someplace. Oh, no, actually, there was something else. 58.93. Now, this is a structured trade in Trader Lab. Forgot all about this. So I did not add there. This is an advanced structured trade in the Trader Lab. And I posted this in Trader Lab. Right about, in fact, I wrote in the Trader Lab chat, which I do participate in naturally, to observe 93. Here's what this is. This is a structured trade. And I took an ad. Now I'll show you where. So watch this. And these are in those 60 PDFs. How do you know what to do? Where do you engage? It's called structured trades. This is a structured trade coming up, and you have to vet them. These are in the 60 PDFs, and they're available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars. You can see this, just like that you might be able to see this one. The right here is absorption. This is resting liquidity. Now, this is a bracketing algo. Just ignore it. So here is the resting liquidity. Here's a buyer. Here's the selling. Here's the liquidity. I take it out. Now, that sets up a continuation trade in this context, and it's at 93. So I post in the Trader Lab, observe, because I don't make trade recommendations. You don't need to take my stops. I take them too. And right here, I come back to my 93. So I get long 93 quarter, and my stop is below. In fact, it was under here, which is a low volume node. Watch. So long at 93, I see absorption here. So remember, the sellers were here, the buyers are here. This is a sweep also. We come down to 91, whatever it is, 91.50. Actually, my stop was under here because of this high volume. So I got below where the absorption was. I just don't remember these trades. I do remember. This is a structured trade, though. So, and then to 5,900. So this is where, and I always give it a couple of ticks. So I got out of my long here. Now, now at 9 a.m., we have something called the IB30. And given the configuration, the IB, if we take out the first half hour's high, there's a high probability we'll take out the first hour's high, which will be called the IB, or initial balance high, which will be wherever it is. I don't know where it is. Where's the IB, guys? 5901.75. Must be covered up. Yeah, it's actually right there. Let me just make a note on this. The first hour's high, I got to mark this just since it's covered up over here, becomes a target. So, and it's up here. So I take out the first half hour's high here. So that gives me a high probability of taking out wherever the first hour's high happens to be. And statistically, there's about a 68% probability that we'll take out the IB high also. So you got a lot of nice statistics saying wherever the first hour's high is, you're going to take it out. So for me, I'm going, okay, I took out my first half hour's high. I have a 60, whatever it just was, 68% probability, and taking out either the IB high or low is a 97%-ish probability. You have to bet these for yourself. So what do I want to do? I want to get long. So if I come outside, right here is something called a low volume node. That's an outside edge. Remember how this works. Oh, it's on sale. Retail, I'm not paying that. Rotations, that's what a consolidation is. It's what's on sale, what's too high, and what's the fair price inside it, or the high volume. So I'm going to call this, again, I'm going to label it a low volume node, because the market can rotate. Remember how consolidations work. We can rotate and come outside some place. So we have this as a low volume area. So what do I know? Let's come back to what we know. We know 93 might be too low. We know we have a long at 93, right? To 5,900. Resting liquidity was sitting there. It's not clear on this. It's clear on the Trader Map Lite, but I'm not going to go show it to you right now. But if you have Bookmap, you can see it. This is support. This is the outside edge. What does that give us when we come back? Right here. This is a potential long. This is the retail. Let's watch, and this is an outside edge. Let's just watch the behavior. Where do I come? Out here. What do I know about 93? There's support here. What is this? Stop pick. 209 stops. This is a long. Outside edge. Oh, it's on sale. I know you might listen to this stream and think it's kind of silly. I understand. Why do I even talk like this? Not to offend you. It's to help you think a little differently about how the market works. Remember, market mechanics. Why are buyers activated? Because if this is the retail price, this is the auction. Think about it this way. You're buying a product in the store, and this is the price. You're willing to pay it, and it goes on sale. And it's one of those flash sales. You know, hey, for a half hour, you can buy your tuna at 75 cents a can. It's $1 up here. If the buyers perceive this sale price as a bargain, they'll buy it. And then the sellers will raise the price back to retail. That's the shopping experience. But if I know 93 was important here, and I come back and check it, and I take out stops, and I see icebergs, that's a long back to here, and the target is to come out the top to get the IB stat, which is this, at 9:30. Next target. Are you guys tracking? This is, now remember I said the last time it shifted that I couldn't take it because there wasn't enough rotation, right? Same structure with statistics above it, but now enough range. Are you guys with me? Structured trading, you can all learn this if you, of course, put in the time and the effort and will put your seatbelt on and then get patient so you can learn how the market works. And why did I label this? Because this is the outside edge. That's the outside edge. If this is retail and I come outside and I have confluence around 93 and I see absorption here, icebergs, isn't it reasonable that if out here, and man, there's no precision in trading. It's the best you got is maybe we'll come back to retail because you're a shopper just like I am. And then maybe because the trend is up and I have a statistic that has a very high probability, 68% on its own, and collectively between the first hour's high and low, almost 97% probability, wouldn't you target this and then hold? I would, and I did. Now, let's continue. If you have questions, please post them, and welcome to the Trader Lab. By the way, if you're visiting in YouTube, there's a link down below. You can visit the Bookmap Discord Trader Lab community. There's no cost. You do need to verify your username so we know you're not a, what do they say, troll, spam, etc. You understand. So that's necessary. And there's also a free version, a digital version of Bookmap available down there also. It says bookmap.com. It would take you to the subscription page and you can get your hands on this. And by the way, if you are a quote subscriber to Bookmap, and that includes the free digital version, then you can attend all the subscriber exclusive training and education, plus the Bookmap Academy, which is coaching and mentoring. But you do have to be a subscriber. Seems like an interesting way to be a subscriber, doesn't it? So let's look at this. Now we're going to get more into order flow again. Now, remember, nothing is clear except in hindsight. So if you're looking for clarity and the ability to predict, unfortunately, this will not be your business because we have to get over it. We cannot be right. All we can be is disciplined and adhere to a trade plan that has a statistical edge. That's how the casinos operate. Seems to work pretty good for them. I noticed they're building larger casinos, not smaller ones. And they can give you the cocktails and give you the ticket to the buffet. I always say if you're going to be a gambler and not a trader, you should just go to the casino, make sure you get the cocktails, and make sure you get the ticket. And if you spend enough at the casinos, they might give you tickets to see Adele. That could be fun. So, buyers are here, buyers are here, buyers are here, buyers are here. Seller, 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 seller. Now, I'm looking at this, and I'm thinking, yeah, Now, the thing is, we're in the middle of nowhere. We're like, where are we going? Wouldn't you like to know? I have no clue. Not my job. But in here, the market is sitting here, and I'm seeing the buyers, and I'm seeing our icebergs, of course. But we're not getting any traction. Now, I'm going to take you into a micro high volume structure. One moment, please. So right here, I'm looking at this, and I remember, nothing is clear to me until hindsight. I break below it. So what do I know here? Sellers. That's what I know, but I don't know until I get the break. Now, these buyers are under the bus. Break here. Sellers are here, and I see my break. I'm below the IB. So this is an IB failure is what it's called. Now, in this configuration, let me say two things here. In a different configuration or context, this is a short. For me, there's no shorts today. There's only exits. Let's watch this. I pull back here. Now, there's a couple possibilities. We can come here, bounce from here, and come back here, and then maybe continue. or not, right? So let's watch what happens. We come down here and I get my absorption again. Now I'm at an outside edge. This is one of them, and it filled in. And there was another one out here someplace. I think it was here. It was here because I had two of them. Yeah, it's here. I'm going to take you back before this was here so you could see that it was there, because this is not my trading platform. You see this out here? This creates this outside edge, okay? And then out here, there's another one, and it's over in here. And there's another one down here. So these are called low volume nodes. Now, when you get momentum, you can, now remember, you can come out here, you can get long. That was one of our trades, right? That was our last long. We bounce here. Now the possibility is go from here to there, right there, or come outside to VWAP and mid. Possibilities. So I know I have stops under this swing. So let's remember that. We come out here. What do you see here? Buyers. What comes down here? Buyers. Icebergs. 869 stops. Thanks for playing. This is when your broker sends you a gift basket. I come out here. Now, right, we have a structured trade in the Trader Lab called VWAP to VPOC, and also mid. It could be out here. It's not. The thing about structured trades are they are areas, and it's very important for traders to know. You don't blindly say, oh, it's the mid or the VWAP, and I'm going to put my order there. No. Well, up to you. Me, not so much. I know there's areas. Here's what else I know. I know that there's stops here. But here's what happens. I'm coming down. I get my VWAP, and I'm ready to, I have my finger on the plunger. I'm ready to go. I see my sellers. I got my set. Let's look at the order flow. So passive side is here. I got my sellers. Passive side is there. I got my sellers. Passive side is here. I got my sellers. Where's my buyers? I don't see my buyers. I got my sellers here. Sellers. Going to mid, right? Now let's look. Stop sweep. That's what this is, a sweep. And I see absorption. Who's absorbing? Iceberg, right here. Seller. And I'm looking here, and I'm looking in this area, and I'm ready to enter. Not there, because I don't have a trigger. I see my buyer. I see my sellers absorbed. I get a buyer here. I'm above this absorption. It's a long for me. And I'm going here. Mean reversion. Let's watch it. Notice where I test. I test the buyers right here. This is also an entry. It's microstructure. Remember, this is what we saw. Sell stops, absorption, sweep, icebergs, everything but the banana boat. High volume is right here. Microstructure. I'm getting a little advanced, but you can learn this in Trader Lab. Now watch. This could be your entry. I tend not to wait. It's just one of my flaws. As soon as I see this, I get in. So I enter here. This is also a structured entry right here. Stop would be under here. I tend to enter as soon as I see this. Just me. I'm not saying that's good. I think the disciplined trader would be able to enter here with a better stop. You know, my stop was out here, and this is my scale, one tick ahead of this thing. It's called return to retail. Oh, it's on sale. See it? And then it's like, are you sure? Yeah. Absorbed, absorption, test, scale. So that's my scale. Now hold. Where was, and what's our targeting? Watch. I was coming back for this. Now, this is the last trade I took. I don't remember where I got out of it. Let me go take a look at it. I'm going to go tell you where my exit was. I got to find it, though. Hold on a second. I'm on my other. And yeah, here, right there was my exit. Here's why. Well, first of all, this is microstructure right here. Now, this is advanced. You'll notice what happened here. Passive selling here, sellers here, buyers, no bueno, came down here. I can read that. You can too if you're in TraderLab. So I know this volume, and you can see it there. There. See, this is what you can do with Bookmap. You can open it up. So I'm seeing the buyers, and now the passive side is here. Why do I know that? Because there's no buying here. I see my icebergs, but where's my buyers above this guy? Seller is here. My sellers are here. My buyers are here. Break low, sellers here. We come up to this buyer, and the sellers are here, and it's more selling. We don't get over this high volume node, which is retail. I think of these the same as I think of the developing higher time frame. Too high, too low, retail, right? Consolidations. What's this? Too high, too low, retail. If I break away from it, it's too high. If I can't get over it, I'm not paying that, and off we go. Okay? And that's what set up the long. Now, what do? We take the long. We scale here. Where do we come back? Watch. I'm not paying that. Out. Does that make sense, guys? It's advanced, but it's all TraderLab. It's something all of you can develop. Are you guys tracking? How are we doing in YouTube? Conscious? The 92 long. Well, Sandor is asking me in YouTube. Thanks for visiting the TraderLab in YouTube. Context is one of the more complex issues that we deal with. And part of the complexity of context is that it changes. While we're in an uptrend today, if we get two-sided trade, it becomes mean reversion, which is a context in a context. Now, this is another long right here, actually. Let's look at this. Now, I wasn't able to take this, but I can tell you right here. My buyers are here. My sellers are here. You remember, if this is now VWAP to VPOC, this, and remember, 93 is important. So where do I come out? I come out here. I come back out here. VWAP, notice what you see here. Absorption is here, right there. And what's over here? VWAP, absorption. Buyers are here. Buyers are there. Buyers are there. Buyers are here. Icebergs are here. Icebergs are here with the absorption. I see right here is a micro trigger. This is a bit advanced, but you got to read it. And look, let's look. Now, this is delta. All it's showing me is what's here. You see the red bubbles? Delta, aggressors. Sellers are aggressors. And what are they again? New shorts and sell stops. Those are the aggressors. That's why you get a bubble. Okay? 1 second, guys. I got to take this. Guys, 15 seconds. Be right back. Thanks. Okay, guys, sorry about that. Just something I absolutely had to take care of. So, and please post your questions. So we have our absorption here, the long back to here. This is your resistance. Watch behaviors. Notice how it paused and back to here. So that long is still cooking. Oh, there you go. So that was the last long in the Trader Lab. Anyway, thanks for your patience on waiting. Sorry about that. Had to do it. How are you guys doing? Questions, please. Please give a like and a thumb up in YouTube if you're finding this interesting and useful. Do you have a trade plan? Have you vetted it? Can you operate like a casino does, not making it up, not being attached to the outcome, only playing games, if you will? I'm just using an analogy, like the casinos do that have a vetted edge, playing them exactly the same way, no matter the outcome. How do you build a business and sustainability in trading? It is understanding the business you're in, not the fantasy. It's not a video game. I'm not saying you can't play a video game, but then you're really just having fun. And that's gambling. And gambling is okay. It really is. But it does not, in my opinion, create longevity. And most retail traders, unfortunately, do not have longevity. Why do you think it is? Do you think they're all hung up on predicting what's going to happen because of their need to avoid the pain of loss, the need to be right? The casinos can't do it. They can't predict the outcome of the next hand. They can't predict how the gamblers play their cards. They can't even predict what comes out of the deck. But why are they successful? Because they accept the environment they're in. They understand the gamblers get paid. It's called overhead and cost of production. There isn't a business on the planet that doesn't have expenses. Our expenses, of course, besides our fixed cost, our losses aren't. So how can we go on a mission of avoiding loss when loss is part of the business? That's because of our emotional fight and flight response. And we actually are guided by these unconscious instinctual behaviors that actually direct us to make decisions that in this business might not be in our best interest. This is what Trader Lab is. This is the heart and soul of Trader Lab. Understanding the business of trading, helping traders develop this understanding and then build out trade plans to operate in a random environment. You know why we can't do it? Because of the uncertainty. Can you accept that every moment is uncertain, not predictable? If you can take away the need to be right and more and exchange that with the need to only get engaged with the other participants when you have a statistical edge, just like the casinos do you think over time that might be a better plan than the one you have right now? And here's the fallacy of all this. We all have winning trades. We all think it's just a matter of tweaking and tuning to get better. I understand. I coined a phrase for it, and believe me, all this evolved from my experience and my evolution and development. I call it Trader Groundhog Day because we all have winning trades. We have sequences of winning trades, and we think it's just a matter of making it better, going back and looking at what we didn't get and getting it to fit. That's what we do. Why? We're looking for certainty. If you're not looking for certainty and instead you're looking for statistical edge, is that something that's tangible? Once you get it, then your job is to do it, not to make it up, not to skip trades, not to be afraid. By the way, how do you manage your fear? Have you ever thought about it? It's not willpower, because I had I used to have a big rubber band on my wrist, and when I would have fear or skip any of those things that are self-defeating, I'd snap the rubber band. And I was going to go to cattle prod to try to change behavior modification, right? Well, I didn't understand behavior modification is at a conscious level, right? The wiring, the primal wiring that worked well out on the tundra, saber-toothed tiger, I'll see you later, doesn't work in trading. We are running into the fire. We are running towards the risk, and we are not wired for it. So the solution that I found was not to curve fit and try to keep fixing a defective process looking for certainty. The solution was to accept uncertainty and then get something tangible. And that's called statistics. If you have a structured trade that you have vetted, you have it sitting on your desk in front of you, and it has a probability of one thing happening over the other. Not a certainty, a probability. And if you have a positive expectancy, and that's what a probability is, over a large sample size of interactions in a random environment, you'll know you have a statistical edge. Casinos play the same way. They only play games that have a statistical edge. They don't know the outcome of the next hand, but they know if they play enough hands, the dollars flow from the gamblers to the house, even though the gamblers get paid. That's the business we're in. Now, how do you overcome your fear, your primal wiring? It's always going to be there. You're not getting rid of it. It works great with the saber-toothed tiger, and if you step in front of a bus, hopefully it'll work there too. If you have statistics, they are tangible. They are not emotional. Your emotions are not driving the bus. The statistics are what give you the control over your fear. Does that make sense? Give a thumb up, give me a like in YouTube. That's the business. That's what it is. So if you're looking for the magic 8-ball, which we had on the trade desk, which always said ask again, if you're looking for the special thing, it doesn't exist. Don't waste your time. You probably already have gone to chat rooms with the only thing you need. And the fact of the matter is, we're all unique, and we have to find what speaks to us. This is language. I don't use indicators. I use order flow. I use an understanding of market mechanics, why it does what it does. I accept the randomness, and this is actually a long potential trade, not a recommendation setting up right here. Not a recommendation. It's called, in its potential, it's called the IB continuation trade. If I wasn't with you right here, I might be putting it on, but I don't call trades because I take stops too. You don't want to take my stops. How many times have you gone to a chat room and you're taking their stops? How about this? Take your own stops. And what's a stop? It's a protection of your account. So the sellers were absorbed here. What happens to these guys, these sellers here? These buyers, oh, really? You want to sell it to me? Here, they were run over. What happened here? Run over. This is called the IB continuation trade. Break high, pull back. It's a long, and you need to be scaling. It's very tight because of the range. And then, theoretically, out the top, not a recommendation. This is the it's the filtered heat map. Let's go look up the food chain here and see what we got. 59.10 has liquidity. We have some liquidity here. We're going to see what happens. You already know that the IB has a long, which I think is right around here someplace. So this is a long in the Trader Lab. If you're in Trader Lab and you vetted this trade, win, lose, or draw, it is a long. I'm asking you, if you're visiting us on YouTube, is this a trade that's in your toolbox? If not, you can download the 60 PDFs. They're available to everyone, no cost, in the Bookmap Discord Trader Lab community, as well as a library of webinars. You'll see this over and over and over. So if you're waiting, and what else is here, by the way? And I forgot about this. This is the long right here. I showed the same trade to you at 93. long, long. I didn't even notice this because I hadn't seen it. Let's go back to 93. Whoa, it's way this morning, wasn't it? Where was this? I might not be able to find it. Was it here? Yeah. You see this? Break, pullback. That was the 93 long, okay? Which I already discussed with you. Then we have this, which is where the last trade I had on, where I got out here. Then this is along to there and up. Oh, actually, was it here? I don't remember, but this is along to here and up. This is the same structure. Break here, pull back, I think, to here. That's along. And wherever that IB high is, this is along. Let's go back so I can just see. Now, this is TraderLab. Yep. See how the difference is in the heat map? You can't see it here. So I always keep this open. So where is this? 90. So this is along. TraderLab right here, structured trade. Let's go look at it again. See the liquidity? This is the filtered heat map. Same trade as 93. I mean, same setup, I should say. And I don't like calling them setups because there's more to it. You know, it isn't just, oh, there it is, boom, be mechanical. If you're a mechanical trader and you just close your eyes and you see it come to the mid and you don't understand how the market works, you're going to wonder why you get stopped out. Because most retail traders just are mechanical. They don't understand any of this. And that's why they don't have longevity. And I know there's always exceptions, and hopefully it'll be you. But the fact is, the failure rate statistically, and again, you have to vet this for yourself, is over 90% that retail traders fail. No longevity. Why? Well, are you doing what they do? So this is a structured trade here in TraderLab Advanced Concept. Here to there. Long here, and then we have our IB, and then hold to where? Let's go back. 10 is the strike price. 5. You know, you start working your strike prices. What's sitting up here? Notice how long this liquidity has been sitting in here. So all of these are viable. So this is what the heat map is showing us. And with rhythmic data, it's not, a lot of these broker feeds, you know, are only 10 up, 10 down in the limit order book. With rhythmic, it's unlimited. I mean, it just goes wherever it goes, you know. I don't think we have any liquidity sitting up here, but hey, you know. So I wanted to show you that. So there's your long. This is a TraderLab structured trade. You'd be sitting long. TraderLab, are you guys in this long? Did any of you get involved? I know it's advanced, and it's right there. And remember where your resistance was. There. So this is a long, IB high, and then wherever. Helmet on, and then you just trail. How do we trail? Let's think about this. Sellers are here. Buyers are there. Long, pull back to what was resistance becomes support. You've heard of this. Resistance, break high, becomes support. This is an aggressive TraderLab advanced process. This is the IB continuation. So you have a long here, you have a long here. These are all structured trades in the TraderLab. And you are all welcomed to the TraderLab. I'm not a vendor. It's just, remember what the TraderLab is, a community of traders, all different shapes and sizes, all different time frames, all different methodologies that have come together to learn from each other, to leverage from each other. And let me show you, while we're waiting on this to ferment, this is the TraderLab chat. And you'll see it's very active, a lot of participation. Who's that guy? I don't know. Charts, posting, examples, trades, conversations, questions. Everybody helps each other. And there's no cost for this. Are you getting that where you are now? And there's no cost for this. So the thing about it is, you can learn this. It's a language. Narrating is a way to try to speak the market's language. Then your trades become the product of said understanding. I don't know, guys. I'm just showing you what the Trader Lab is. I normally don't do this, but there's a lot going on here. Let me see what else there is up here. We have traders post the what's going to happen for the day, the reports. We have someone who's asking about context. This is higher time frame context. All of this is available. You can learn a lot in Trader Lab. You know, if you don't understand how the market works and you're kind of dependent on indicators, I think what you're going to find is that indicators are not the answer. They might even be part of the problem. It's not that you can't use indicators. What it is if you don't understand how the market works, you're not going to know when and how. You wouldn't understand why. Whoop, get over here. This is a long. Why is this a long? Why is this a long? Why is this a long? Can you answer the question? If you're in Trader Lab, you can. And why are we looking for higher? Now, there's nothing up here. Don't forget, we're in new territory. So it's a guess in the sense of where is it going? Nobody knows. So we don't know that either. What we know in Trader Lab is structured trades. Once you get the trade on, then in your trade plan, you have a vetted process of trade management. How might we manage this trade? Well, let's think about this. This was resistance. This is the last long. Let's come back to this. This is resistance. This was resistance. We broke above it. This is now support. So how might you manage this trade? Well, this is the IB continuation trade. So you could be long here. You could be long here against that. Remember, that's our long that I was showing you. Structured trade, advanced. You'd be scaled. You get long here. You'd be scaled or close to scaled, depending on where you enter and how you manage your trade. Your stop could be under here, or under here is probably a better place for it, in case you get a stop pick and you're just hanging out. Now, trade management. What are you going to do? Let's get into that. Let's think about this a little bit. These are not trade recommendations. How might I do this? Well, this was resistance. You see the behavior there, and that's coming from here. That's how this works. This is an auction. I'm not paying that. Yeah, but it's on sale. Break low, test. Sellers here. That's what creates that. Okay? Now, I come back to it. It is resistance. There's my sellers. Same guys from over there. Break low. Uh-oh, going to zero. But what do I have here on the way up? Location. What happens here? Absorption. That's what happened here. Pac-Man. That seller was absorbed. So what's over here? Up. What's this? Long. Resistance becomes support. Support. Location. Trading is like real estate. Location, location, location. Structured trades are location oriented in alignment with the context. And I don't know about you, but I can't see any reason to want to be shorting this. For me, in my time frame. My time frame is the rotations. The profits for me are in this, not in that. I use the counter rotation in this context for positioning in alignment with it, not fading it, unless that's your business. I mean, you could, if you want, you could be selling this, you could sell this, of course you'd sell this, you get stopped out. Why wouldn't you be buying it? I'm just asking. I'm not saying you shouldn't sell it. I'm saying I can't. I've spent too many years, like so many other traders in my development, going, oh, it can't go any higher. Have you ever said that? Have you ever traded that way? If you're trading that way, then you don't know trading. That's emotional. Fear of loss. I don't want to buy it. I guess I better sell it. You know? The other problem with all this is you're right sometimes, and that reinforces behavior that has no edge. We're all right sometimes. Gamblers win. You got to remember that. They're right sometimes. That's why they keep gambling. Let's look at the microstructure right here. So this is too high. I got my sellers here. I got absorption here. I got my sellers below. Support was here. Let's see what happens. And I also have this, which is where that liquidity is. I'm going to put a line in here just so we remember where that was. Okay, it's not a high, it's a very micro structure. And it's not a high volume based structure. It's a different animal. Oh, I'm just going to mark it so we remember. So we know support, resistance, and support. Anything can happen. None of these are recommendations. It's, what is it? Maybe. Maybe we'll go up from here. Maybe it's the high of the day. And if we don't know, then why should we even try to figure it out? Because we can't know. So make a note of that. Nobody picks the high of the day, at least if they're being honest. Everybody knows where the high of the day is in hindsight. But we can't operate in that. We have to be here now. We have to be using a process of managing our trade. So if we're in here, we know that the buyers were here. Where's the microstructure? Sellers got trapped here. Buyers were right there under this high volume, which is in here. So this is also a form of support. It's at the IB high. So let's watch it. Volume is here, right? Break high. Where do we test? Here. Break high. Where's the volume now? Well, it's there and it's here. You can see the little micro high volume node. Doesn't mean anything other than it's a auction-based location that suggests maybe in the structure this is too low. Now we don't know. You know, if we get under it, then it's like, oh, I guess it's too high. What was too high here? That. Where's the line? It's right there. What is that? It's resistance. What's the trend? It's up. Any reason not to be long? You tell me. Support? Resist. Trend up. Let's watch. Questions? Please give a thumb up in YouTube. Please give a thumb up in YouTube. This is Trader Lab. This is structured trading. You guys can learn this if you're interested in it. This is the basis. And I'm giving you you can go much further with this once you understand how it works. This is a language. If you want to learn to speak a foreign language, be realistic. You've got to put the time in, the practice, the replays. You're going to suffer through what it takes to internalize what you're seeing here because it's language. We all start in this business with indicators or something. And many retail traders think it's red light, green light. This crosses over, then you do that. You know, I built trading systems which were that kind of mathematical process on steroids. And we're always looking back to try to look forward. For me, looking back is right here. That's my look back because I can read the order flow and know what happened here. I don't know what will happen here. See? But I know what did happen right here. I know this was too high. If I can't clear the passive sellers here, I'm going to rotate down. That's as deep as this is. That's what I know. Does that make sense? Questions? How are we doing in YouTube? Please give a like, give a thumb up. And there is a link down there if you're interested in the Bookmap Discord Trader Lab community. There's no cost. You just have to verify your email. This is kind of what these structured trades look like. I did these over four years, almost 5 years ago, and I'm not a vendor. And some of this was research oriented. Traders in the Bookmap Discord at the time before Trader Lab were asking me, "What are you doing?" I said, "Well, I'm glad to share what I do." There's no, everybody is, "Oh, I'm not going to share." What is this, poker? No, come on, get real. You see, the problem in trading, I believe, is not learning how to trade. It's actually trading. And most traders never learn how to trade. They put all their energy on getting a interpreter called an indicator to do the work. That's not learning the trade, my friends. That is just plug and play. This is not a plug and play business. This is you really got to learn it business. This is market mechanics. Why would this be resistance? Do you understand why the order flow is saying the passive side is here and these buyers were absorbed? Why is this resistance? Do you understand that? Do you understand that if we can't get above this, we're going to get this? I understand it, and so does Trader Lab. Now, we can't predict it, but if you know what's here, can you manage your trade? Now, subject to your plan, you might be out of this trade right here. Not saying you should be, I'm saying you could be. Where does this trade fail? It actually fails under here. Out here. Out here. So it could just fiddle around. Or, subject to your time frame, you're out of this trade. See, that's the thing you've got to figure out. What are you trading for? Are you just trading, there to there, and then you're out? Or are you trading there to scale, and then you hold? What's your plan? Do you know the answer? You can get those answers in Trader Lab, in my opinion. And of course, past performance is not indicative of future results. Now, my personal opinion may not be appropriate for you. I believe if anyone comes to Trader Lab and does the work and has to have the capacity to learn a language, that they can learn how to trade. The next piece is, will they be able to trade? That is the psychological impediment of fear and greed, of emotional triggers, primal wiring. That is the bigger obstacle. I believe anyone can learn the trade if, again, capacity, commitment, and we're not talking 3 months and now you're a trader. Let's get real. Not going to happen like that. Unless you're an exceptional being, and I have to tell you, I'm doing this going on 45 years. I haven't met an exceptional being. I've met some very intelligent people. I've worked with quants, hedge fund traders, a lot of different traders over the years, bank traders. And I will tell you, everybody had to put the time in. And everybody has an illusion or fantasy of what this business is. And it's really not what we think it is. When you get a software toolbox and you get 150 indicators in there, you go on this quest. The right indicators, the right mix, and the right time frames. How many years have you been doing that? And what is the outcome? Are you experiencing Trader Groundhog Day? That's what I experienced. Trader Groundhog Day. Working hard, doing derivatives of the same process, getting the same outcome, which was not good, ultimately, in spite of having winning trades and even streaks of winning trades. But over time, it broke down. I built trading systems because I thought if I did optimizations, that would smooth it out, and I would optimize, and I had all these great metrics, and it would still break down because you go back, right? and you curve fit. Optimization, let's use another term, curve fit. So when you go back with your indicators and you slam them over the big rotations or the 20, whatever it is you're doing, and you see that it wins, that's what you do going forward. And then you have more losers than winners, and you still get the occasional winner. But then it's about, let me go back and make it better. If that's you, that's a circle you'll never get out of, in my opinion. And the only reason I can say that is I've done it. And so does everybody else I've met in this business at some point. And either they're out of the business or they get past it, because all of a sudden the light bulb goes off that they're doing derivatives of a process that they believe will get them the results they want, without understanding that it might be a defective process that cannot get them the results. If you believe you're doing the right thing, then you're going to keep doing it. I did. I thought it was just persistence in a matter of time. I didn't understand that what I was doing was not in alignment with the business I was in. I didn't understand the business. I thought it was about predicting. And even statistics, going back with hindsight, it wasn't. And it isn't. Again, not a recommendation. I'm just talking about me and all the traders in the Trader Lab, because they've come to the same conclusion. Waking up a trader Groundhog Day. I don't think that's a sustainable process, in my opinion. By the way, if you're in YouTube, remember, there's a link down there to the Bookmap Discord Trader Lab community. You could download those 60 PDFs I showed you, become part of a great community of serious traders. It's not romper room. This is business. If you're interested in the business of trading, I'd like to meet you in the Trader Lab. You can come on over and say hi. There's a lot of support there, not only from me when I have time, when I'm not trading, but all the other participants. The leverage that's created in the Trader Lab is because all these participants coming together. Trading is a very lonely business, as you guys know. Nobody understands it. Try talking to your friends about it, or your spouse or family. Their eyes glass over and they think you're out of your mind, and that you're a gambler. Well, we are risk takers. If that's gambling, then yeah, we are gamblers, except we're the house. That's what we are in the Trader Lab. And the other thing about gambling, because I think about this too, and I was, everybody, same things that are said to you are said to me. And it's, yeah, you're just gambling and you can't win. Everybody loses, right? And I was thinking about, well, somebody must win. And the other part I thought about was, if I opened any business, isn't it a gamble? If I opened a restaurant, isn't it a slower moving gamble? If I open any business, it's a gamble. It just isn't compressed or leveraged like this is, but it always is a gamble. So if I understand all businesses involve risk, and this business is based on gaming theory, which is statistically based, then does it make sense if I can operate with a proven business model like a casino, with only playing games that have an edge, accepting I have no control over the outcome, but I do control how I and when I interact with the other participants? Is that give me the basis for a viable business? I'm posing the question because I believe you can get the answer in the Trader Lab. That's up to you. But you all have an invitation. There's no cost to visit the Trader Lab community to participate. And remember, in the bottom of YouTube, there's a link to bookmap.com. It'll take you to the subscription page, and you can get your hands on a free digital version of Bookmap. It comes with data. It's for crypto. And then you would be a, quote, Bookmap subscriber, which would give you access to all these subscriber-specific streams and webinars, and also the Bookmap Academy, where you could get mentoring and coaching. All of it at no cost. I think that's beyond, because I don't know any other companies that make that offer, and also don't get you where you have to pay for a trial. No, you don't need to do that with Bookmap. So I'm pretty enthusiastic about Bookmap. For me, order flow was always a missing piece. and I was never able to do it, even back early on when we finally got domes and all of that. It was just I couldn't concentrate on what was going on in limit order book. But with Bookmap, I can read it right here where I want to be. Please give a thumb up in YouTube. I'm just about out of time. Um, if you have any questions, if I didn't get to them and you're in YouTube, use the link in the bottom of YouTube to visit the Bookmap Discord Trader Lab. You will not be spammed. None of that nonsense. That doesn't happen. You can be in the communities and find the areas you're interested in. There's additional education besides order flow with a high tier tool like Bookmap, stocks, large and small cap stocks, options, crypto, market maker behavior, and a lot more. You can learn, but in the end, you have to do. And if you want to do it by clicking the link in the bottom of YouTube. Visit the Trader Lab. Take advantage of all this education while it's still available to you at no cost. The Trader Lab is available also at no cost, and while it still is, you might want to take advantage of it. One never knows how long Trader Lab or any of this other education will be available at no cost. So if you find this interesting, if you're either watching this on YouTube after the fact or you're watching it live right now, take advantage of this. Use the link. I'd like to meet you guys. I'm passionate about what I do. I've been doing this going on 45 years, and I can tell you, I spent too many years doing things that kept bringing me back to a place and it didn't work. In spite of it working at times, we can all have winning trades. That's not the issue. It's sustainability, building a career. And I believe you can get that opportunity if you become part of the Trader Lab community. Roll up your sleeves, become patient, not impatient. Learn to speak the language of the market. And remember, at the top of the stream, I mentioned the potential development of a blow-off top. That's not a recommendation, but we've been talking about that in the Trader Lab, what it looks like, and what the manifestations might be. It's possible that we're in that phase. So come to Trader Lab if you're interested in learning about market mechanics, how it works, why it does what it does, how you might get in alignment, using structured trades, and having the support of a great community. Take care, everybody. Thanks for visiting the Trader Lab. Look forward to seeing you soon. And this stream is available exclusively to Bookmap Discord Trader Lab participants for screenshots, review, and to reverse engineer these structured trades. Have a great day, and thanks again. And don't forget to give that thumb up and a like on the way out. It's a way you can say thanks for the stream.
7, 6,